Hello, everyone. This is your market update for Tuesday, July 29th, 2025. Today, we're going to get retail inventories, consumer confidence, and job openings. Tomorrow will be a big day, ADP employment, pending home sales, and then we'll have the Fed meeting at 2 p.m. with Chairman Powell begin his press conference at 2:30. We'll see what he has to say. And we're also going to find out, yesterday I mentioned the quarterly refunding announcement from the Treasury. They put this out from July through September. They're going to borrow $1 trillion, which is 453 billion higher than they announced in April. And we're going to find out how much of that is going to be in short-term bills versus long-term bonds, 10-year, 20-year, 30-year bonds. Trump has come out and said until interest rates are lower, he doesn't think they should issue very many 10-plus year bonds. And if they go on that plan, we could see short-term rates increase as they're going to have to put $1 trillion into that short-term debt. So we'll be watching that closely. Over to the charts, we're going to start with the 10-year Treasury yield, currently at 4.39%. Basically, we've been range bound here for quite a while. And I imagine we'll probably stay range bound. And if we did see a breakout above the upper boundary, which is probably currently around 4.75%, if we were to see a breakout above that, then I think we're on our way to 5%. And that would probably disrupt markets. The dollar currently at 98.80. We had a close above the 50-day EMA after the quarterly refunding announcement. The dollar rallied significantly, and we're working on progressive closes above the 50-day EMA. This will be the first time we closed above that level here since late February. So it looks like we are getting our intermediate degree breakout here, and I think we're probably going to rally to the 102 to 103 area in August and September, and that should give us our pullback in precious metals. Gold currently trading at $3,318. We closed below the 50-day EMA yesterday. We'll see if we get that progressive close. I'd like to see prices close below yesterday's low, which was $3,310. That would set us up for a confirmed intermediate degree breakdown. How low prices go, I'm not sure. 2,800 is probably off the table. That was my initial target back in April. Around 70 to 80% of the time, we get a gold cycle indicator reading that we had in April. Prices will correct up 20%. About 20 to 30% of the time, prices will just consolidate. And this looks like one of those consolidation zones, and we're not probably going to get that 20% correction just yet. But I do think we could probably come back to visit the 3,100 area, maybe 3,000. Over to silver, currently trading at $38.29. I think we're pulling back into an interim cycle low that'll probably bottom late this week or early next week. I think as long as it holds the 50-day EMA, which is currently around $36.65, then I think we'll be okay. And then we could see one more rally, maybe towards $40 after this cycle bottoms. Over to platinum, currently trading at $1,422. Yeah, we have multiple red candles in a row. Looks like we are getting a pullback into an interim cycle low. Same thing, I think, as long as prices hold above the 50-day EMA, which is currently around $1,306, then this is probably just a pullback. We're going to see one more attempt at 1,500. And then GDX finished down yesterday 2.54%. And we'll see if we can hold this floor here at $50.32. Eventually, I think it will break, and then we'll get our pullback. And then I'll look for support around the 200-day moving average, which is currently at $43.66. That's it for now. Have yourself a wonderful day.